David, it's a pleasure to have you back on again as well. And I'm going to read some of these stats because I almost stole them for the RBI, but then I said, I can't do that to David. These are his numbers. We're just going to let him do it. This is amazing. You have noted that because we were all kind of waiting for this 5% pullback. We talked about it incessantly. We actually got it just off the highs. You said there were 34 market pullbacks of more than 5% going back to 1993. But of those times, what has happened later on? Give us a little bit of deep stock market history to make us feel a bit better about what happened yesterday.
Well, that's the surprising thing. The corrections happen. They're pretty quick. They typically take 3 to 4 months. And the recoveries also are pretty quick, maybe 4 to 5 months. Of the 34 corrections, and 3 of them were big bear markets, 31 were fairly modest, and you had fully gone back to the highs within about 3 or 4 months. We think that's going to be the case this time. We don't expect a bear market. So what we're saying is this is a very good time to buy the dips. At the lows yesterday, the market was off 5%. So that's been a year since you've had that type of correction. We think it's safe to start to go back in the water if you had money on the sidelines and we're looking to put some money to work. There are a lot of stocks that are also down more than 10%. So we think there are a lot of very good opportunities out there right now. We're going to be talking about some stock picks later. We're much more excited about stocks today than we were a few weeks ago. And we think there's some really good opportunities if you have a 6 to 12 month time frame.
I love the data. The average drop about 12.8%. We may continue to go down, David, right? I mean, it's not like we might just say, okay, the all clear and that was it. But you're investing for the long term. And a name like Qualcomm is one of the names that is topping your list.
So Qualcomm is a great technology company. They are in the guts of every cell phone in terms of 5G, great play. They're also going to be in automobiles and a lot of other areas of industrials over the next few years. You're buying it at about 16 times earnings. Very, very powerful franchise, great price.
Another one, you know, we've talked a little bit about, I don't want to call them, what do we call them? Mid-major banks. They're not JP Morgan, they're not Morgan Stanley, but we've had a lot of people on this show talking about the PNCs and the Truists of the world. You like another name, US Bancorp. Again, huge company, but again, just doesn't seem to get the market attention like the big dogs.
Well, even the big dogs aren't getting a lot of respect these days. Right now, US Bancorp is a top 10 bank. Very, very powerful franchise, generating a great deal of money, pretty diversified, and you're buying it at 11 times earnings with a 3.3% yield. Banks have done well this year. We think they have another 12 to 18 months of very good returns. US Bancorp has done well, but it's recently pulled back. Again, great entry point, very good outlook, especially if the economy is improving, which we're very comfortable with. Inflation's kicking up, and we do believe interest rates are going higher. That'll give them a little bit of a tailwind.
Yeah, and maybe the media company with the most sort of, you could actually write a Viacom movie or series about the internecine warfare and drama around Viacom. It seems to be stabilizing after about 10 years of tumult. Is that one of the reasons you like VIAC or something else, David?
Well, we think they have a very good streaming strategy, which is going to take hold. We think that the CEO is doing a really good job in running the business, and they're selling it about 9 times earnings. So this is a very good franchise. It's all about eyeballs. They've got great product. And at 9 times earnings, we think you're going to do very well with it. Had a great run earlier this year. We had owned it. We sold it. We bought it back and really are pretty upbeat. We think the stock easily has 50% upside as an independent company.
Wow.
We think it's going to do a lot better. But we also think there is ultimately a chance that they could get acquired. Both ways you win.